So, with all the hype and quite frankly fear around AI, how it's going to take our jobs, we're going to all be unemployed, and we're all going to be on universal basic income, I like to focus on real life use cases. And we're going to use Meta as an example. They had their earnings call on April 29th, 2026. And what we're going to do is take that publicly available information. We're going to take the transcript from the earnings call. We're going to take their press release. We're going to take their financial documents, and we're going to add the annual report. We're going to upload it to ChatGPT. And then we're going to run prompts. We're going to run questions, and we're going to have answers. We're going to understand the business. And finally, what I really like to do, and I think is a very underrated use of AI, is to pressure test ideas. So when I'm reading something, I have a bunch of questions. I like to put things in very simple terms. So we're going to pressure test a couple of ideas that we get or a couple of thoughts that we have and see how on the mark are we to understand the strengths and weaknesses of our thoughts. I think pressure testing is a highly underrated aspect of AI. If you want to follow along, I have a link in the description to Meta's investor website so you can download these documents. We're going to walk you through all of that. And then we're going to run some prompts. And let's go. All right, ladies and gentlemen, we are here at Meta's investor relations site. So what we want to do is feed our AI tools great and relevant data so it can make great outcomes. It can give us the information that we want. So let's download a couple things. So we're going to click on financials and go to quarterly earnings. We want to download earnings release. Let's show what that is. The press release. We want to show the earnings slides, which is really just a PowerPoint, right? It all comes back down to PowerPoint. The balance sheet, which is in Excel, it all comes back down to Excel. The income statement and the earnings call transcript, which is that webcast written out. And the follow-up transcript, which is the after, I think they can come back and ask some questions based upon some of the answers. Let's go to annual reports as well. Let's download this annual report right here. And let's just take a quick peek at it. So this is 145 pages. And this is a filing that they have to do to the SEC. So they're talking about their business. They're talking about their risk factors, information on cybersecurity, legal proceedings, forward-looking statements. This is all great information. We don't have the time. I know you're busy. I'm busy. I don't have the time to read all of this. So download that. Then in that folder, we're going to go to ChatGPT, and we are going to go to the project and go to sources and add all of that information into ChatGPT. So it's going to so this is the data that we are feeding ChatGPT. All right, so we're all uploaded into ChatGPT. It may take a minute or two. One thing I recommend: click on chats, click back, make sure all of them are uploaded. Sometimes if you do it too quickly, it's not, but we're good. So let's just start. So here we have a prompt that I've created. I'm just going to say I'm an individual investor with investments in index and growth mutual funds, and obviously Meta takes up a lot of that. And what I'm looking for is overall health of Meta's business by brand, if that's available, growth, opportunity matrix, as well as risk matrix. So what's the upside, what's the downside, and how AI tools will increase Meta's positioning, and Mark Zuckerberg's playbook and strategic vision. Pretty basic stuff, but let's go. So top line, Meta looks financially healthy, but is becoming a more aggressive AI infrastructure investment story. The core business is strong. It grew 33% year over year. Wow. And margin held at 41%. Ad impressions rose 19%. Average price ad rose 12%. Free cash flow was still $12.4 billion despite heavy capex. Instagram, very strong. Facebook, WhatsApp, under monetized asset. Threads is emerging, but not any meaningful revenue yet. So Reality Labs, Quest weak, Glasses strong, still operating at major losses. Meta AI, strategic centerpiece. Assistant, personal agents. So, all right. So I want to keep that in mind, that Meta AI is a strategic centerpiece to this. Right off the top, in this growth and opportunity matrix, AI is going to really help with ad targeting. So if you're looking for an AI play, Meta might be the one. This is interesting. Right off the bat, AI-powered ad targeting, high. Generative AI tools and AI tools are going to improve Meta's positioning. You're going to see better ads or more relevant ads. And then Gen AI is going to be able to create ad tools. So their core business, which grew 33% year over year, is looking pretty good. Reels, seems like Reels is doing well. WhatsApp. Here we have more of the under monetized or still in the growth stage, and they're working on Threads, they're working on AI glasses, and the metaverse. So here's the risk matrix: high capex. This is a major investor concern. Capex increased from 125 billion to 145 billion. So there is a risk in terms of AI. Did the ad models create enough ads, engagement, agent, and hardware value to justify spending? Regulation high. AI strengthens Meta in 4 layers: more engagement, better ads, cheaper ad creation, and a new product layer. So you're going to have Meta AI shopping agents, business agents. So here's the Mark Zuckerberg playbook: build to billions. So scale, get mass scale. Remember his quote: "It's got to be cool first before you make money. Monetize later. Use the ad machine to fund long-term cycle bets." And that's what Reality Labs is. So here's the read from generative AI. Meta is not just defending Facebook and Instagram. Zuckerberg is trying to turn Meta into the default AI layer for social life, small business, commerce, and eventually wearables. So the bull case for Meta is AI is going to make the ad business stronger while opening the next platform. The bear case is this capex for AI is going to really shrink returns. So I want to understand, what's this AI capex funding? Like, is it funding data centers because they're popping up left and right? Is it funding the current platform or the next platform? So I want a little bit more information about this AI capex, which is a little bit of a drag on the balance sheet. Mark Zuckerberg believes it has ROI, and I think he knows pretty well. So let's see what we got. So it's funding both. It's funding the ad model. It's funding the Reality Labs, and we're talking about data centers, GPUs, AI accelerators, networking, storage, power and cooling systems, a huge constraint, and then the software model infrastructure, training frontier models, interface systems, internal AI tooling for engineers, and ad systems. I love that ChatGPT has just gone and give us their opinion on what's going on. They're saying Meta's not choosing between the present and the future. It's trying to collapse them into one investment. So if it works, this capex, ads get stronger, engagement increases, new AI businesses emerge, Meta owns the next interface. If it fails, you got a $100 billion infrastructure. Margins are going to compress. Margins are very healthy, and weak incremental ROI. So today, the AI capex makes Instagram and Facebook ads better, and then tomorrow it's going to power assistants, agents, and wearables, and potentially a new monopoly layer. So what I like is this guy's not just sitting on his laurels, and it's probably not popular with Wall Street, but he's making a bet for the next 50 years, next 100 years, and I think he's looking for the next iPhone. He wants, if there's a new iPhone, a new technology layer, he wants it to come from Meta. Okay, so just reviewing all of this, I want to pressure test a couple of thoughts. Is it safe to say he's looking for his version of the iPhone, the next piece of hardware that is ubiquitous? And people kind of laughed at the iPhone when it came out, and people may laugh at Reality Labs, but he's looking 20, 30, 40 years ahead. Another idea I want to pressure test is basically you have this very healthy, growing digital business, and you have a call, buying that stock, you're going to have a call option on a future that may or may not materialize. But if the upside, if one of those bets works out, is tremendous. That's another idea. The other one I want to pressure test is, it's safe to say the ad business will continue to increase, and that alone makes the stock compelling to buy. Okay, so here, is he looking for his version of the iPhone? Close, but not quite. I love it. He's trying to own the AI interaction layer across all devices. So we're close, but not quite there. So he's chasing the next computing platform, which is wearables, always-on assistance, and new interface layer. The iPhone wasn't just a device. It was a hardware, OS, developer, ecosystem, and distribution control. Zuckerberg doesn't just want an iPhone. He wants something bigger than the iPhone layer. He is trying to own the AI interaction layer across all devices. Meta is trying to win by owning the intelligence and the social graph. A healthy business. So basically, I said they have a healthy business with a call option on the future. So they're saying that's mostly right, but it's not a pure call option because AI spend is already impacting margins. CapEx is already massive. This is funded internally, not optional capital. So here's the mental model it gave me. The core ads are the cash engine, AI improvements to the ad, immediate ROI, AI agents and assistants, growth extension, glasses, and the platform shift, a call option. If one bet works, upside is tremendous. So, what's more likely to work? Tier one AI ad tools, feed ranking and improvements, those are already working. Tier two, business AI agents. Number three, the big bets are AI assistant dominance, glasses, and a new interface. And those are iPhone level upside. Is it safe to say the ad business will continue to increase? That's where you need to be careful. It's directionally right, but not safe. So they're giving me all the good stuff, but also why it's not guaranteed. Apple privacy changes, a big deal. Competition from TikTok, YouTube, and Amazon. Regulation and ad load limits. The blunt investor take, you're buying one of the best businesses ever created. You're accepting massive reinvestment and uncertainty. You're hoping for one platform win, AI or hardware. So he's swinging for the fences. You gotta admire it. It's all right. So we have dissected Meta's earnings call from April 29th. And then just in 15 minutes, we were able to understand the health of their business, the opportunities, the risks. And then finally, what I like is pressure test. So we came to our own conclusions. We didn't use, from the AI output, and we pressure tested just a couple of ideas just from scrolling, to be quite honest, through the AI output. So that's very exciting. I love using AI tools to pressure test ideas. Now, there's this idea that AI is just going to always tell you what you want to hear. But when you ask for pressure testing, you're saying, put me under a little bit of scrutiny. And as you saw, my conclusions were close, but not quite accurate. I love it. So we have a great understanding of Meta's business. We have a great understanding of the opportunities. And now we can be an observer here. So I look forward to doing more of these. Thank you for watching. Please like and subscribe to Jeff on Tech if you want to do more of these AI tutorials. And also, we're going to do a little bit more of a deep dive into Meta's earnings. And I will see you soon.